Hello, all you lovely people out there. How are you doing? I'm Kate Hill, and I am here to give you the best unbiased and honest commentary about our property markets, along with some fantastic hints and tips. Now, today we're contending with aircraft noise. We've got the plumbers outside doing drain cleaning by the sound of it, so forgive the noise and stay tuned for all your property news. Now, APRA have announced some changes to lending standards that will affect everyone trying to borrow money for a property purchase. I did a whole separate video on this and what has happened, what it means, so do be sure to check that out right here. The National Residential Property Rental Vacancy Rate rose marginally to 1.7% in September from 1.6% in August, but it remains below the 2% level of a year ago. The figures from SQM research show that many of our 8 capital cities continue to have vacancy rates well below 2%. Melbourne, where the vacancy rate remains steady at 3.5% in September, is the only capital city above the industry benchmark of 3%. Sydney has dropped from 3.5% a year ago to 2.7% now, although the inner city area is still much higher. The figures are broadly in line with those published last week by domain.com.au. SQM data also shows that 70% of locations across regional Australia have vacancy rates below 1%. SQM Managing Director says vacancy rates remain in favour of landlords for most capital cities, with the exception of Melbourne and inner Sydney. You'll also see in this chart here that median unit rents rose in all capital cities over the past 12 months except Sydney and Melbourne, but that median house rents rose everywhere except Melbourne. And they have obviously been the ones that have been mostly affected by so many lockdowns. Now, recent data from CoreLogic tells us that the total value of residential real estate in Australia has grown to 9.1 trillion, gaining 1 trillion in just 5 months to set a record valuation for this sector. The total value of homes across the country is now 28.2% higher than the estimated value of superannuation, the ASX, and commercial real estate. In the past 12 months, home values rose by an average of 20.3%, which is the fastest rate of annual growth since July 1989. CoreLogic says that the rapid growth in values means that dwellings are of increasing importance to household wealth, you think, and could generate more investor interest. New South Wales took the largest slice of the country's residential market, with 41% amounting to $3.76 trillion. Victoria has 28% of the total value, and Queensland accounted for 15%. Western Australia has 7.2% of all those trillions, and South Australia 4%, the ACT 1.9% and the NT 0.5%. The sharp rise in valuations comes as the national median house price rose to over $720,000 in September, and units $587,000. A recent surge in switching loans among property investors has helped lift the amount of mortgage refinancing being undertaken to record levels. Lending indicators released by the ABS show mortgage holders refinanced $17.8 billion worth of home loans to another lender in August, which is the highest ever recorded by the Australian Bureau of Statistics. Owner-occupier refinancing dropped by 1% month on month, though it still reached over $11 billion in August. But refinancing among investors rose 11.5% to also a new high of $6.53 billion. Refinancing levels have more than doubled since October 2018. The Reserve Bank has cut the official cash rate 6 times over that period, and lenders have responded by dropping home loan rates. The average variable rate has fallen by 121 basis points for owner-occupiers and 125 basis points for investors. That's unusual. As a result, existing mortgage holders have had the opportunity to switch to a lower interest rate. Successful auctions are rising nationally, with almost every capital city recording a clearance rate above 80% last week. Over 2,900 homes were taken to auction, the busiest week since mid-July. Melbourne again had the busiest week with 1,478 homes taken to auction. Of those, 79% were successful. Across Sydney, 911 homes were taken to auction, with 85% reported as successful. Continuing Sydney's 7-week streak of 80% plus clearance rates. Now, as lockdown restrictions ease across Sydney, Melbourne and the ACT, the spring selling season has finally started in earnest, and vendors are piling properties into the market. I probably wouldn't quite call it piling, but we're seeing a slight increase. New listings have surged 28% nationally in the 4 weeks to mid-October, amounting to more than 45,000 new properties added to the market. The news could be a relief for us buyers because it does mean we have more stock to choose from after an extended period of very short supply. Now, we will keep you posted on all things property from around Australia as our year progresses. Don't forget to give me that little hit on the subscribe button. Hit the like button if you're enjoying the free content, and I will see you again really soon. Bye.